What's up, everyone? It's Scotty with MoneyVest. So markets here rolling over a little bit here on the day once again, but of course getting bought back up. Intraday, we had the NASDAQ down a little bit over 60 basis points, S&P dropping over 0.5%, and the Dow Jones also selling off a little bit here on the day. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time. And links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. There's over 45 plus lectures and tutorials that you can access as part of our MoneyVest membership, along with our buy and sell alerts, trade alerts, and trade ideas. These are very, very useful, and again, links going to be down below, and of course access to our spreadsheet, including our fair values and our watch list as well. And do connect with me on Instagram. I do share a lot of behind the scenes portfolio updates, polls, tips, strategies, videos over there as well. So my handle is going to be CASWRP. So NASDAQ here down almost 60 basis points, S&P dropping over 0.5%, and the Dow Jones also pulling back. So markets are definitely seeing a little bit of that lost momentum from last year. I mean, 2023 was a very strong year, and this year so far we have seen, again, the first couple weeks, 3 weeks, not been super great. I mean, the markets have not really seen a significant rally, but we have also not seen a significant sell-off either. So it's been mostly consolidating. It's been mostly sideways so far. Now, stock market outlook, small cap stocks to soar 60% in 2024, according to Tom Lee. And going into the year, small caps was also one of my favorite sectors. As I mentioned before, biotech, small caps, solar, cybersecurity, semis. These are the 5 that I basically mentioned that are going to have a lot of potential upside, especially small caps, because they've seen so much underperformance relative to their large cap counterparts. And because of potentially lower interest rates, that's going to be beneficial for small caps as well. So an overlooked area of the stock market is set to soar in 2024 after significantly underperforming the S&P last year. According to Tom Lee, in an interview, he said that small caps could soar as much as 60% thanks to compelling valuations relative to the S&P 500. And I think small caps could make a bigger move than large caps stocks, 50% or 60%. I think the Russell 2000 could end the year above 3,000 is what he also mentioned. So, a very, very strong, of course, potential upside here. And in a very few times, Tom Lee and I are somewhat on the same page. I think small caps definitely do have a lot of potential. I mean, of course, he's almost always bullish, and there is going to be that narrative around upside and of course, long-term gains. And I'm most of the times on board with the analysis. Maybe sometimes there is some level of cherry picking the data, but in 2024, I do agree. I think small caps do have a lot of potential. That's exactly what I'm going to be planning on buying here very, very soon, starting that experiment with IWM and looking at TNA for a swing trading opportunity as well. Now, Goldman Sachs expects the Fed to cut interest rates 5 times this year, starting in March, and that's going to be the expectation here. The Federal Reserve is likely to start lowering its benchmark interest rates in March and make a total of 5 cuts in 2024. And the investment bank expects the U.S. economy to come in for a soft landing with modestly slowing economic growth and for inflation to keep dropping this year. And Goldman expects the central bank to gradually ease rates, which would steadily reduce borrowing costs for non-consumers and for consumers and businesses as well. And with inflation ebbing and the economy holding up, the Fed last month maintained the Federal Reserve's rate at a 22-year high at just over 5%, reinforcing the views that that his last hike in July marked the final chapter of the central bank's campaign to subdue price and wage gains. And of course, policymakers left open the possibility of further raising interest rates, but they obviously did not. And now they're forecasting 3 cuts for 2024. So a lot of it is kind of hinging on the idea on where inflation goes. So basically, the chain of thought starts with where inflation is. Inflation drives interest rates. Interest rates drive economic growth, and economic growth drives unemployment. So basically, interest rates drive spending. Spending drives earnings and hiring and unemployment and economic growth. So that's kind of like the chain of thought here with respect to macros and just understanding how the economy will function and how the markets might perform. So as long as inflation continues to trend lower, and we are seeing prices come down, which is a good thing, that is exactly what the Federal Reserve is looking for, right? Obviously, we know core PCE is their preferred measure of inflation. So if that continues to drop, continues to come down, that's phenomenal. But if the moment it starts to kind of stagnate sideways, the moment it starts to continue to be a little bit more elevated and stays, a little bit higher than usual, then of course the Federal Reserve may need to rethink their expectations for rate cuts and their policy path moving forward. And that's obviously not going to be great news because the market's pricing in as many as 7 rate cuts and the Federal Reserve's told us 3. So there is this huge sort of disappointment, repricing risk because market's expectations are here. Federal Reserve's potential deliverings over here. So that's the gap that we're trying to bridge. And that's going to be a potential disappointment if of course, the Federal Reserve does not deliver on those expectations. So that's where we are. But still, again, some rate cuts are expected in 2024. So, of course, time will tell where we see rates going in 2024 and this year. And not to mention where inflation ends up being this year as well. So markets obviously pulling back. We did have a lot of individual stocks selling off. Tesla here, Apple, Google, Amazon, Microsoft, NVDA, everything selling off. So all 11 sectors in the S&P 500 were lower in the last 1 week. Technology is the only sector that's pushing higher. And in the last 1 month, of course, we do have a little bit of a split market with comm services, healthcare, defenses all pushing higher with other sectors selling off. And we got oats, palladium, we got lean hogs, crude oil, platinum, feeder cattle all pushing higher with ethanol, sugar prices, lumber, orange juice, and coffee also selling off. And Bitcoin here a little bit over 42,600 and Ether just over 2,500 as well. So coming back over to crude oil, just mostly consolidating sideways, so not really going anywhere. Just a lot of sideways action here. It's $73 a barrel. Volatility here seeing a little bit of that momentum higher, so it's up a little bit over 7% and getting back up to almost 15. So got to be super careful and super understanding of the fact that VIX can potentially spike here, and that's exactly what's going to create that buying opportunity here for us, and dollar cost averaging opportunity going to create that buying window for stocks once again. So keep a close eye on the VIX here at 18 to 20 levels. So that is going to be that level to keep in mind. And of course, the market's starting to roll over a little bit. Going over to the spreads and the 10-year yields, back over 4%. And as a result, we did see TMF and TLT selling off pretty aggressively. The spreads are almost back to positive levels, but still down negative 24, 25 basis points at the moment. Now, this right here is another really interesting indicator, right? S&P 500 stocks trading above their 50-day moving average, and it was down almost 10% to now 70%. So again, we're starting to see that correction. We're starting to see that pullback. We're starting to see that selling pressure, which is extremely normal. Nothing to be afraid of, nothing to be concerned with. This is exactly what we have discussed. And in my previous video, I mentioned 5 signals, 5 indicators that I watch. And when I sort of like, they trigger my buy signal personally, right? When I started dollar cost average into, and this right here was one of them. So it's coming down. That's great. We're going to have to wait and see how low does this come down to. And then another one was, I believe, S5TH. S&P 500 stocks above their 200-day moving average, also starting to roll over, down over 5%. So now 66%, only 2/3 of stocks right now are trading above their 200-day moving average. And there was one more, which is 20-day moving average, selling off pretty aggressively, as you can see, down 26%, down to now under 30% as well of stocks that are trading above their 20-day moving average. So very important indicators. Kind of gives us a little bit of an idea of where the market breadth and the market technicals are positioned. And again, the lower it gets, the better. The lower the price, the better the more oversold the market becomes, the better it's going to be for us as a buyer in the market. S&P 500 this week, it is down close to 1% on a shorter week. So support level is going to stay put at 4690, close to 4700. So this right here is going to be that level to watch with a resistance all the way up to 4800. And of course, another support sitting down at 4600 as well for S&P 500. Talking about the NASDAQ, and NASDAQ here also consolidating sideways and in between that range. We've talked about this level between 14,400 and 15,400. So that 1,000 point range is where NASDAQ is at the moment, just trading sideways. We've got a little bit of that negative divergence with the RSI, also somewhat overbought, and of course the MACD as well. And the price still needs to rally a little bit close to 10% before it can start trading back up to its all-time highs moving forward. Talking about Apple here, and Apple on the day just consolidating sideways here. Not really going anywhere, down about 0.5%, still validating that 200 simple moving average, and of course that support at roughly around $181 per share. So this is where we are, and this does not look super great considering that we just printed a lower high. So if I were to basically point to this potential lower low, boom, right there, and this right here can be argued as a little bit of a lower high as well from Apple stock, which once again seems to be making a little bit of a downtrend, which is not super strong from a technical perspective. So if we do end up, let's say, breaking down below this 180 level, next support is going to be down to 165, and that's exactly where I would be a lot more aggressive, and we'll be looking at buying a lot more shares for Apple as well. Talking about Amazon, and Amazon here also starting to pull back down almost 1%, and of course RSI MACD coming down. This right here is the overall uptrend, resistance all the way up to 154, 155, so we're getting a little bit of that resistance and that rejection at those levels. The higher low is going to stay right over here for Amazon, and of course support level all the way down to $143 per share for Amazon as well. So previous resistance acting as a support for Amazon, and of course resistance and getting rejected at 155 for Amazon. Talking about Tesla, and Tesla here also rolling over a little bit. It's been selling off quite considerably, down another 2% on the day, but of course it's at a support at the 100 SMA and in a very strong area of demand inside this green rectangle between $200 and $215. So inside of this downtrending channel, getting rejected, got a huge area of supply at 275 to as much as 325. So we already understand where the resistance is. And now, considering how oversold it is, I wouldn't be surprised if we do see a little bit of a bounce back higher. That's exactly one of the reasons why I'll be looking at potentially selling some puts for Tesla here at these levels, and with the strike price, of course, in the 170s and 180s, considering how oversold we are. We're at a very major support now. We're at a moving average, so there is possibility for Tesla to kind of rebound a little bit and see that reversal back higher. Talking about NVIDIA, and NVIDIA here on the day, slightly down about 0.5%. Finally, 560, and market cap still sitting at just under 1.4 trillion. Incredibly oversold, incredibly overbought. RSI and MACD very, very high. And of course, we did see a very nice breakout from this ascending triangle, and support level and this area of demand is going to stay put roughly around 486 to as much as $500 per share for NVIDIA. Talking about advanced micro devices, and AMD here also seeing a very nice massive move to the upside, up another 90 basis points. Extremely overbought here. 160s is where it's at. Seen a very, very parabolic move to the upside. So on a weekly time frame also, it is very overbought. So it's got to be super careful with advanced micro devices. And in my opinion, I think all-time highs are achievable for AMD here in the next few weeks for this company to get up to over 170, 180. Of course, this was a very, very underrated stock, so it's done incredibly well in the last several weeks here. Talking about PayPal, and PayPal here on the day also pushing up a little bit over 2%. Some buyers stepping in on the week. It's down about 1.8%, so up a little bit over 2.4, kind of validating that support once again at $56, a level that we have identified and talked about in our previous videos, and resistance all the way up to those moving averages. We got the 200 SMA sitting roughly at 63, and another resistance at 65. So lots of consolidation in between that range. Again, resistance right here, support level right over here, and we're just seeing a lot of sideways consolidation for PayPal. Talking about Visa, and Visa here also on the day pushing up to a new all-time high at 267, continues to move upwards, slowly and steadily drifting higher. Support level is going to stay put at $245 to $250 for Visa, and of course resistance right now we're kind of tapping onto its higher high, but it's also trading at an all-time high, so there's going to be some level of price discovery that's going to take place over the next couple of days as it kind of identifies that next resistance and that area of supply for Visa stock. But of course, incredibly overbought, hitting that higher high, and support level is going to stay put down to 245 to 250s. Talking about Meta platforms, and Meta here on the day also pushing up 25 basis points. So it did kind of gap down, then got bought up here fairly quickly. RSI, MACD, again, a little bit more elevated. We're starting to continue to see a little bit of a rising wedge pattern for Meta as well, as it continues to trade in this higher high and this higher low, higher high, higher low pattern, which again does sort of represent a little bit of that convergence, coiling into that rising wedge, which could potentially lead to a pullback down to 350s to as low as 330s, 315s. And that's only after it kind of gets up to that resistance and potentially that all-time high of 383. So that's going to be that target next for Meta, and support level is going to stay put down to 353, down to as low as $327, $330 per share for the company. Talking about Netflix, and Netflix here also starting to pull back a little bit, 19 basis points lower. Resistance is going to stay put right over here, so that is going to be that area of resistance that we've talked about, and support level is going to stay put down to 450, so 449, 450 is going to be that level. And again, we continue to see this higher high and higher low pattern, and if we do end up seeing a breakdown below this, next support is going to be down to $450 per share. Talking about Google, and Google here also on the day just down about 83 basis points, continues to trade in this higher high and higher low pattern, so rising wedge over here. And of course, if you do see a breakdown below this, which would not be surprising, support level is going to stay put down to 126 for Google, and resistance all the way up to $150. So that right there is going to be that next resistance and target, and support level is going to be down to 140 all the way down to $126 per share. Talking about Microsoft, and Microsoft here also down about 20 basis points here. Support level is going to stay put down to $384 per share, down to 366. So that is going to be that next support level to watch for Microsoft. And we're seeing a lot of consolidation. Of course, we saw a breakout a little bit to the upside. RSI at MACD also a bit more overbought, almost at 70 RSI. MACD also a little bit more elevated. So support level is going to stay put down to 384, down to as low as $366 per share for Microsoft. And finally, we come to Costco and NFAs, and Costco and NFAs here. Costco starting to continue to move higher, 684, very, very strong momentum upwards. And this is a stock that it's just a question of when it's going to start selling off, not if, because of how overbought and of course how parabolic it's been. What goes up must come down eventually, because these moves are not going to last forever. So there is going to be some level of consolidation and perhaps even a bit of a pullback down to a support level that's going to be consistent with what we have seen before. So this right here is going to be that level at 644, 645 as an area of support, all the way down to 500, sub $600 levels for Costco. And finally, we get NFAs. NFAs here still selling off, down a little bit, close to 2%, almost 3%, $105, starting to break down below that area of support that we identified. Again, this is still a sort of good deal area, so low 100s are still considered to be pretty solid, in my opinion, for NFAs, considering the low valuations and expected growth here for this year. RSI MACD coming down. It's not a surprise, because that's exactly why I was selling calls in the first place, is because I was hedging my potential downside, and that's why it's so important to be looking at selling options to make money, and of course to hedge your potential downside. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do drop a like on this video. Join us and connect with me on Instagram. My handle is going to be CastWRP, and the Patreon link is going to be down below. I did open up a couple more spots with that 16% annual discount. You get access to all the trade alerts, ideas, everything's going to be included with MoneyVest over there as well. So as always, happy investing, and I'll see you all in the next video.